Bill Thompson, talking with, what's your name, sir?
Glenn Isherwood from the Citizens Electoral Council.
Okay, you're not far from the Banking Royal Commission, just along the street here.
Yes.
Is that essentially why you're here today?
Absolutely. Yeah, we've had our table and our information tables at almost every single day of the Royal Commission this year.
In Sydney and
Sydney.
Yeah. Okay.
Also Melbourne, every time it's been here, Queensland and Darwin as well.
I attended about an hour, maybe as much as 2 hours of the hearing yesterday when the CEO of NAB was being examined. What are your main issues with the banking system in Australia? Is that the main problem you have?
Well, our party, Citizens Electoral Council, and me personally, we're very concerned about vertical integration, the complex structure, cross-selling, conflict of interest, all of those elements, but the toxic culture in banking, which has played out and borne out what we've seen from the Royal Commission.
Okay.
And how we change the structure of banking so it doesn't happen in the future.
Have you personally had some bad experiences with a bank or some banks?
No, not personally.
Okay, nor have I. I've been a banking customer and a very occasional bank shareholder for 40 years. And my experience of the banks has generally been pretty good. They've lent me money on occasions when I've wanted to buy a house or what have you. They've given me credit cards, which I've been able to use in Australia and around the world on occasions. They've kept up their side of the bargain, and I've kept up my side of the bargain by repaying the credit cards as they fall due and the housing loan. So, I haven't got a lot of complaints. I appreciate there's been some revelations of people having bad experiences. Can you summarise a couple of things that you think are the worst aspects of banking culture and performance?
Well, there's a long list.
Yeah, sure.
The first one I would say is the wrongful foreclosure or calling of loans from farmers
right.
that had never missed a payment.
Okay.
You've had cases where...
Can you just expand on that? If the customer had not defaulted on any payments, how could the
what
bank...
What happened in cases with Bank West and also with Landmark was areas of Australia where the bank deemed to be of a risk profile higher than they wanted, then they called in, removed credit lines and stopped providing financial service to the customers that were loyal. And,
okay. How long ago was this?
Well, the cases I've heard were from around the time Bank West was taken over by Commonwealth Bank.
Which was approximately when? Do you recall an approximate year for that?
I mean, in terms of years, it's all on the record.
Okay. Did it coincide, for example, with the global financial crisis when banks were kind of...
Absolutely.
Okay.
Well, one thing I'd say about the financial crisis, 2008-2009, should have been a wake-up call
yes.
to the problem of too big to fail banks.
Yes.
Now, we have 4 banks in this country which account for 80% of the market. By any definition, they are systemic banks, and anything happens to them in terms of their capital or major losses, the question of bailouts and bail-ins is a major concern.
Mate, I spend a reasonable amount of time in America. I've got family and friends over there, and you've just pointed out that Australia has 4 big banks. In America, they've got a gazillion banks, and my recollection is that a lot of smaller banks went under. Some of the bigger banks had serious strife as well, and needed to be bailed out.
Yes.
During the GFC.
Part of that is because they're systemic banks, they highly integrated, where you had a mixture of investment banking and commercial banking.
Right.
And it was both sides that failed because of the subprime loans.
Absolutely.
And then, rather than there being a crash, the government was forced at that point to rescue the banks to keep the global system going.
Indeed.
But we've had 10 years now of almost very extremely low interest rates.
Yes.
Which have led to another credit bubble forming in US stock markets,
right.
housing market in Australia. So we're up for another GFC.
Look, you may be right. I've heard presumably knowledgeable commentators who have made that case, and others who have said, no, we're on the cusp of an economic boom period. It remains to be seen. Paul Krugman, I think it was, the New York Times economist, famously said that after Trump was elected, the financial markets were never going to recover, and within a couple of months they were booming. It was as high as almost 27,000 points on the Dow recently. It's back down to 24.5 or something now, but still far better than Krugman predicted. So, people can make all kinds of predictions. I by no means want to see bad times ahead. I'm hopeful that things will improve, but my basic view is that the four large banks have served Australians and the Australian economy pretty well. I looked at the list of the 10 largest corporate taxpayers in Australia recently, and if you don't mind the four major banks being in the top 10 of tax-paying entities in Australia, and then the major miners rounding out the rest of the top 10, it's a pretty good sign that they're contributing a lot to Australia in terms of taxation and employment.
I would differ on that. I would not say the big four banks have served as well.
Okay.
I would say that they have contributed the most to creating a housing bubble in Australia, which is a danger.
Right.
And I would also say that between them they have the lion's share of $40.6 trillion of financial derivatives, speculative contracts in swaps, futures and options, which, as Warren Buffett once said, were financial weapons of mass destruction.
Absolutely.
They have exponentially grown since 2008, 2009.
Okay.
And in that time, we've seen cases of mortgage fraud. We've seen cases of, charging dead people fees.
Yes.
Cross-selling products, not providing services for fees charged, and taking $700 billion out of people's superannuation in fees which were unjustifiable. So
to add to their bottom line profitability. Okay.
If you're only looking at share prices, I would caution that, because as we saw in 2008, 2009, the markets hit a peak, but it was not sustainable when it crashed in a heap.
Yep.
So I would say, look, rather than having banks that are just chasing the money, we need to have a regulator, APRA, that is looking out for customers and consumers first and foremost, not just the bottom line of the banks, and making sure that more of the investment of our banks goes into small business, productive activities, manufacturing, industry, agriculture, not just into the concentrated market of housing, construction, mortgages, which we see an over-concentration of at the moment.
Look, one recent example of banking activity that I experienced, I sold a car a few years ago, and the guy wanted to give me a Westpac bank cheque in payment for the car, and I didn't have a Westpac bank account at the time, so I took the cheque to Westpac to open the account so I could get a quick clearance on the cheque. And I opened an account, and then they said, well, you can get a higher interest rate if you open an e-choice or e-something or other account, which I did as a side account to the savings account. And over the next few weeks and then going into a couple of months, my phone was running hot, my internet was running hot with contacts from the Westpac Bank, so offering me this service and that service and the other service in quite aggressive marketing fashion. And finally I said to them, will you take my name and phone number and email address off your list, because I don't want to get all of this crap. So I support the view that the banks may have pushed too hard, and that's reflected in some of the stories that have come out in the Royal Commission. But you mentioned ASIC and APRA and
Yes.
the oversight agencies.
That's where the responsibility chiefly lies. As the regulator, they have a job to do. And as one former research director of APRA said, Dr. Wilson Tsai, the terms of measurable performance of APRA do not consider outcomes for customers or of banks. It's only bank stability.
Yes.
And making sure that the bank's integrity is sound, but whether they're putting too much investment or feeding a bubble is not of a concern to them. And that is a problem which we are facing now. Next year could be a very turbulent year for a lot of homeowners. Foreclosures, risk and mortgage stress is at its highest level since 2007 in Australia now.
Mate, I was actually a property speculator myself up to about 10 years ago. I was living in Brisbane at the time. I had borrowed and bought a couple of properties in Albury because we had lived there. We borrowed and bought a couple of properties in Brisbane because we were living there and wanted to invest. And in 2008, late 2007, early 2008, when the GFC really started to bite in the States, I thought, okay, I've got to get out of this. At the time, my wife and I owed about $880,000 on loans for properties, and all I wanted to do was get out. And fortunately, we did. But look, I regard my circumstance at the time as a reflection of my own willingness to undertake risk. The banks